you stream around 11. So I was like, what? Yeah, I know. That's what happened. So like I was trying to get here, bro. I was like 120 plus trying to book it back to the pad. And I was blowing Mustangs, Chargers, Camaros. They had some jackass out there with a license plate that said something about like you're too slow or something like that. I was on his ass, and because I'm on the left lane, and every like 20 miles or 15 miles, there's a sign on the left side that says left lane for passing only. Now, I'm passing everybody, and there's always some dickwad in the left lane cruising. Fuck. Cruise in the middle lane, cruise in the right lane. Don't cruise in the left lane. So, in the left lane is for people who clearly want to break the law, who clearly are exceeding the speed limit and do not give a fuck about it. And special shout out to Google Maps, because Google Maps lets you know that there's a police officer up ahead so you can slow down without getting a traffic ticket, which gave me the ability to go even faster. So, blowing everybody, right? Pull up to this car. It's got the "You Too Slow" license plate on it. So I'm on it. I'm bucking the engine. They're like, oh, with the loud exhaust and everything. Turns out some chick. So she's probably driving her boyfriend's car. She moves over. I'm thinking she gonna run with me now. So as soon as she gets over, I done it. Topped off. She let me have it. She let me have it. The Hellcat let me have it. Two other Mustangs let me have it. A Camaro let me have it. I'm like, what? Y'all got sports cars, bro. This is a straightaway. Y'all should have been trying to. Y'all should have been trying to run it. Y'all should have been trying to take me down. They ain't want that smoke, bro. You were selling, bro. I thought you let the sun rise. No, no. I will have to either be in the hospital or in jail in order for the sun to rise before this podcast goes live. So I am airing this podcast. I think the closest thing to me not being able to air this podcast before the sun rises is when I take one of those plane trips to Asia, and the time zones are different, and I'm trying to hit that same time slot and I miss it because a 15-hour flight or 17-hour flight plus finding my room, then setting up the computer, getting all the internet stuff. That might be the only time I might make that mistake. But no, I was like 10 hours away from my house. So it wasn't technically that far, but technically it was far as fuck, especially when the serpentine belt broke on the car. So it was the main belt. Not like, oh, it don't have power steering. Fucker didn't have power steering when we started. No, it did not. It doesn't have a water pump now. It doesn't have an alternator now. Like the big belt broke on the car. And I was like, shit. So had to get it towed. Then we had to find a place to park it, all this other stuff. He said, when you going to do letting the sunrise stream? Oh, I've already told everybody that right before you got on that as they see, we start late. I'm not going to let the sunrise without going live thing. So I'm not going to do a sunrise stream. I'm not going to, if I can help it, I'm not going to have a 7 a.m. or 9 a.m. live stream, because I cater to everybody around the world. And this time of night, it's the evening time for Asia, the night time for America. So I get the whole world paying attention whenever they come through. So let's go ahead and dive into today's topic because I wasted 2 whole hours. And I want to make sure that I cover this before too, because I had something else I wanted to do. Because I have some clients that started to, and it's convenient. I work for myself, so my 1 o'clocks are a stop on Thursday. So Friday I have a 2 o'clock. So I don't have a 1 o'clock. So actually, I still got 2 hours to air the show between 12 and 2. Interesting enough, but I should only need like an hour and a half for this. The grind never stops. Let's see. He said, they make it a hot pocket. Why do they make a hot pocket pizza? So here's one of those entertaining trolls. Special shout out to Steve. He said, if they make a pizza hot pocket, why do they not make a hot pocket pizza? That's because the pizza is full of hot pockets. The hot pocket. A hot pocket is like a mini dough thing rolled up. Like they basically made a baby pizza and rolled it up into a thingy. So like you're asking, why don't they take little hot pocket pizza flavored hot pockets and put it onto a pizza? I mean, if you're stoned and that's what you want to do, by all means, you order you some Domino's, heat you up some hot pockets into the microwave, and then sprinkle them across your pizza, roll your pizza up, and eat it like it's a joint, and then smoke you a joint and drink you a brewski, like a nice little Budweiser or whatever. Go take you a nap. Now, On to the important stuff. We're postponing because I told you guys we're supposed to be seeing a dip in the stocks we're looking at for next week, so we're not buying anything yet, so you haven't missed anything at all. But the stocks have been fluctuating in our favor because as they're going down, we're not buying into them. So before they start going back up, we're going to be buying into them so that we can catch them at the lowest level before the ex-dividend date. So that was our news flash as far as stocks are concerned. Now, when it comes down to insurance, now. He says, Stephen Jr. Oh, of course. Of course. You know they're going to call themselves trying to use a name. When trolls, they come with familiar identities so that you feel comfortable with them in your comment section before you block them. I just let them hang around because when they comment, it does trigger the algorithm. But if they comment inappropriately, I got to block them. I'll let them troll as long as they're not inappropriate. So he's talking about Hot Pockets. We're fine. But like the other guy with his comment, I didn't even air that comment because that was just racially biased, and I don't approve of hate speech on this channel. So he said, yo, it was Stephen Jr., bro. No, it wasn't Stephen Jr. It was Ringo. Ringo came in here and said something inappropriate, and I had to ban Ringo. So it wasn't you guys. It wasn't you or Steven. Steven's doing a good job of triggering the algorithm on YouTube. But let's talk about this insurance thing. Have you ever had that sinking feeling when you were on the phone with your insurance company and you've paid your premium faithfully month after month? You know, you held up your end of the bargain, but when you finally need them, when disaster strikes, it feels like they're speaking a different language. You guys ever had that? Because like I was telling you guys earlier, because when our car broke down, instead of me calling my insurance company, the first thing I did was search for a tow company. Even though I should have roadside assistance and I should have free towing and free rental cars, or not free rental cars, like deductible rental cars. Like I could take out a whole claim on my car right now because of what just happened. But I just called a nearby tow company and gave them $125 and have them drop my car off at the house. And I'm like, I'll just deal with it when I deal with it because I own the car. I only leave the house once a week because my insurance makes me do it. But if my insurance didn't make me do it, I wouldn't leave the house at all. I get everything delivered to the house. So I don't need a car. I want a car. Right? So I was like, I'll deal with it. I'll deal with it another day when I get motivation. Now that the belt's broke, now I'm like, I'm probably going to take the plates off of that car, put it on a different car, and change over the insurance. Switch the insurance to a different vehicle. So add one, drop one. It costs like $14 to change over the registration from one car to the next. But I got to put tires on the other car because the other car had a flat. So I had to put tires on the other car and put a new battery in it because it has been running for a while. But I can jump it because I have a battery in my current car. I just need to take that battery and put it onto the terminals that are on the other car because I ran cables to the other car so that I could jump off the other car. So I got a lot of stuff going on. He said, oh, what happened again with the camera? Why does it keep switching to the, hold on guys, going back to the webcam? He said, yes, this guy is the in. I have been scrolling YouTube lives for like an hour just trying to get someone to play Snake Farm. Okay, let me see what's going on with my why do my cameras keep kicking off? All right, we're going back to the phone. This sucks, but that's what we're going to be doing. We're going to be going back to the phone because it is not doing what we needed to do. Again tonight, StreamYard has been failing us, and I don't know why. But in a live stream, the show must go on. So we're going to go ahead and pull this back up from a different perspective, and we're going to just make it work from there. You said you have some stock picks if that's what's going on here. Okay, good. Let me know about the stock picks as I get my camera back up here. Get my other camera up here. And we're going to go ahead and do put myself back in there. There we go. There we go. You got some stock picks.
Yes, my dude. So if I buy stocks, no, you don't. You don't. If you buy stocks, you make soup. You don't make soup with. You're thinking about chicken stock. We're talking about making money, Steven. You got to be. You got to grow up sometime and start trying to make money for yourself so that you can be self successful. It's like sufficient to take care of yourself, not be a dependent of somebody else. Not have to work for somebody else. Something to that effect. Like so. You can hang out, Steve. You can hang out and like pay attention in the show and like learn from some of the people that come here that want to make money, because that's kind of where we are here, is to make money for us. So 60-second Songbird says it's a love story about a lady that works at a snake farm in Texas. Well, the snake farm in Texas better be a stock option. Now, as we move into the insurance conversation, because that's what we're supposed to be talking about today, when we call this insurance company trying to take out a claim, they have this language of loopholes and exclusions and fine print that you can't possibly read, from 0% APR deals that aren't really free to confusing coverage inclusions that end up costing you for a fortune. These aren't outright falsehoods, they are legal lies. The carefully crafted phrases that sound reasonable but aren't designed to do one thing. It's designed to protect their bottom line at your expense. Oh, hold on a second. He's got a stock here. $ONDS. It said first FAA approved drone manufacturer for beyond line of sight operations. I have said before that if you invest in the military stocks and ETFs, you make a shit ton of money. With them bombing Iran right now, you should be buying into military stocks, because they're going to make a lot of money off of that. Then also, you have to think about police departments, cybersecurity, anybody who's building those doorbell cams or the personal cameras for the house security cameras. All of those companies, big investments right now. They're growth stocks, so they're not going to pay you dividends. But if you invest in them, you'll make a lot of money in them right now. So good job for 60-second Songbird finding us a stock that we wasn't looking into. We're going to try to take that stock and add it to the collective. Steven said insurance sucks. They try to raise rates if you just ask a question about a claim without making one. You ain't lying, bro. Just go uninsured is the best on minimum. Well, that's what happened today, because I've got basic liability because I've got a really old car. It doesn't have enough value in it for me to have a bunch of money in insurance policies. I need to have PIP and basic liability to cover uninsured motorists. That's it. Uninsured motorists. That's it. So that's what I got. I do have some, I think I have some roadside assistance and like towing services, and I was trying to think of the other thing, the rental car thing, just in case, but I don't use any of that stuff. I just drive it so that when they pull me over, they don't give me a ticket for not having insurance, or depending on state you're in, they tow you because you don't have insurance. So I'm paying for the insurance so that they don't take my car from me because I own it, right? Now, like I was telling you guys today, it was easier for me to call a tow truck and have them take my car back to the house than it would have been to take out a claim. But if I really get desperate, I could take out a claim and have them rebuild the whole engine on my car so that I don't have any problems with it, fix the AC compressor and everything so that the car is running good, charge like $15,000, $20,000 worth of repairs and charge it to the insurance. And then my insurance will go up like $50 a month next quarter, but I could do that. Hunter says, I pay full coverage and it's over just $300. A lot of people are paying full coverage because even if your car is sitting still with full coverage, it is covered. So if a tree falls on your car in the house, your girlfriend sets your car on fire, it's covered. And then with gap insurance, if she burns your car up and it's totaled now, it's covered and it pays off the policy for you. So you don't have to worry about paying for a car that you don't own anymore. So there are some benefits for having insurance. He says, I only have one car covered and my payments went up over $100 in 2020. Yeah. Yeah, your payments are going to go up. Your payments are going to go up if you increase the value of your car. Your payments are going to go up if you increase the quantity of cars you have. Your payments are going to go up if you lower your deductibles. Your payments are going to go up if you take out a claim, and your payments are going to go up if you add drivers. So cheapest insurance you can have for a motorcycle, probably the best you're going to get. Now, the friendly agent who sold you the policy is gone, replaced by an adjuster with a rule book thicker than a phone book, and even the very words that he tells you seems to be designed to confuse you, wear you down, and make you accept less than you deserve. And the most frustrating part is much of what they're doing is perfectly legal. They aren't breaking the law. They are using the law, twisting it, and leveraging a complex system against you. He says, if you have an at-fault accident, how much do it go up on average? That depends on how much the damage is. You're going to have a minimum of $10,000 on those accidents because of PIP comes into effect upon the crash. So your insurance is supposed to pay for yourself, and it's $10,000 for you. And your insurance is supposed to pay for everybody that rides in your car, and that's $10,000 per person in the car when the car gets crashed. So if it's you, your girlfriend, and your best friend, that's $30,000 off your insurance as soon as the crash happens. Then you have the damage your car did to the other person's car, because unless you're in a fault state, the no fault state says it's nobody's fault, so everybody has reasonable liability, so everybody's insurance pays. You're going to pay for their car, they're going to pay for your car, and then you got to sue them for the difference. But unless you mitigate that where the insurance company is reimbursed off of the claim, then they paid out, you got paid, but they didn't get reimbursed, so your insurance is still going to go up. Then you got to think about the ongoing medical bills after the fact. Some of it can go to your insurance, but it may not. It may go to your personal insurance, even though your personal insurance isn't supposed to be covering car accidents. It could go to your personal insurance. Then if you got into the accident on your way to or from work, there's a strong possibility that your work insurance could be involved in a car accident too. If you were working in the process of driving, now you have a workman's comp claim. So there's a lot of things that you got going on now. Just under the assessment that it's just you and one other vehicle, and your damage to your vehicle that your car's insurance is going to pay for. And let's say the damage to your vehicle is like a fender bender, like $1,000. Well, if you do like $1,000, $2,000 worth of damage, anything under $5,000, and then your PIP, your minimum claim is $15,000. Now, they want their money back. So divide $15,000 by the next 12 months. Right? You're looking at like $1,000 extra at a time. Now, that's not how much your policy is going to go up. Your policy might go up $50 to $100, $150, but it's going to be guaranteedly high. Then you're like, if you leave your current policy and go to another company, they're going to charge you even more. So you can't even say, fuck it, I'm out, and go somewhere else. Hunter says, oh yeah, insurance lingo can be just as bad as health insurance lingo. But see, the thing about the hospitals are dirty. They want to get their money. So they want you to tell them what your personal health insurance is, what your business health insurance is, what your car health insurance is, because they want to make sure that they charge everybody. So you might go in there with a couple of scrapes and you might just need some aspirin or some penicillin or something like that, some Tylenol, go home, sleep it off, and you'd be fine. They are going to do $30,000 worth of tests because they get paid for the test, not because they treated you, because they did $30,000 worth of tests. They're going to do concussion protocols. They're going to do CT scans, MRIs. They're going to do CAT scans. They're going to do cancer evaluations. They're going to do a rectal thing. They're going to look at the spot at the bottom of your foot. They're going to stick their finger in your butt and move it around a little bit. And they're going to charge you for all of that. You're going to feel like you walked out of a Diddy party with no money in your pocket. And they're only going to do that if you have all these insurances on your record. So when I go to the hospital, I tell them cash only. They're like, what policy do you have? I don't have one. Oh, you were in a car crash. Yeah, I know. I'm uninsured. I don't have anything. I tell them nothing. Give me your insurance claim. Nope. No, I don't have nothing. Because if I do, they will tax me. And they might fuck around and tax me even though I'm not in a car crash. Is auto insurance required in Florida to drive? Yes. I think Mississippi is one of very few states that does not require you to have insurance. Florida will write you tickets if they see your vehicle without insurance. They will. Oh, Florida is even worse, bro. So here's something that I can tell you firsthand experience. If you don't have insurance on your car and your car is still registered, within 90 days, they will suspend your driver's license. And then they will charge you penalties to reinstate your driver's license. And then you have to go get your insurance before they allow you to re-register your vehicle. They will also put a stop on renewals of your registration or your driver's license related to not having your cars up to date. You have to show them that your car was stolen or something to that effect, that you don't have the place to turn it back in. You're still going to pay a premium, but they're not going to keep holding you to that vehicle. It's crazy. If your car gets repoed and the repo company doesn't turn the plates in, you still own the car until somebody else registers it in their name. So your insurance will say, hey, he doesn't have insurance on his vehicle. So the DMV will suspend your license for a vehicle that got repossessed. So you have to show the paperwork that says my car got repossessed. That's why I don't have insurance, because I don't have the vehicle. But if you don't have proof, they're going to tax the fuck out of you. I'm just assuming you are or have worked in the insurance business. Do I have to work in the insurance business to tell you how insurance people fuck people over, or do I have to have the knowledge that tells you that insurance companies fuck you over? Which one would you feel more comfortable with? Somebody who's paid by the insurance companies to tell you that everything's okay, or somebody who knows how being fucked over feels and says, hey, you could be getting fucked over too? Answer yourself that. Eric says, I know up north of me in New Hampshire, they don't need insurance to drive. Right. Now, also remember that when litigation occurs, since you don't have any insurance, they can sue for your personal estate. So they can take your house, they can take your car if you have anything left in that car, they can take your trust that exists in America under your name, they can take any savings for your kid, college funds, all that other stuff. They can, outside of your personal homestead, they can take every other property that you have and liquidate it for the sake of paying off the damages that would have been covered by insurance. So do you want to drive with no insurance so that the one day that you did become at fault for the crash, that you don't have any coverage? I don't know. That's one of those peace of mind Oh, and it's a no fault state. Oh no, fuck that. I definitely got to have insurance. Definitely got to have insurance in a no fault state, because if they hit you, it's your fault and their fault, because it's nobody's fault. So there's going to be reasonable liability for each party that has to compensate. I'm not doing that. I'm still talking about insurance. Yes. Songbird was still talking about insurance. So always have insurance. Good point. Always have insurance. Always have insurance. Now, look, I'm trying to double do. This is a lot of work. Okay. I've seen good, honest people get tangled in a web of perfectly legal but profoundly unfair tactics that cost them a fortune, their peace of mind, and sometimes even their homes. Now, I'm not here to scare you guys. I'm here to arm you guys, because the only defense against a system designed to confuse you is the knowledge. The only way to fight back is to understand the game. Oh, thank you so much, Donnie. If you were here for something appropriate, that would make more sense. But okay. So in tonight's show, we're going to be pulling back the curtain. So we're going to, he said, fight the fire. That's like a 70s or 80s song. For you to note that. So we're going to dissect the 5 most common and costly legal lies that your insurance company tells you, and we'll break down why they work and how they show up in your car, home, and health policies. And most importantly, what you can say and do to challenge them and get the fair treatment you pay for. Now, this is the information they hope you never find. So let's get started. The first slide happens right after you agree to the policy, when you start setting up payments. It says we can break that down into easy monthly payments for you. It's convenient. And this way, it'll manage your budget. It sounds like a favor that they're doing for you. This is our first lie. The idea that monthly payment plans is a free or convenient service is the biggest lie they can tell you. The truth is that convenience almost always comes with a cost. A cost that often buried over, downplayed, but adds up to significantly high amounts. Can they cancel at will? They do cancel at will, but no, technically they can't. They can't just cancel just for the sake of canceling, like you're paying them. But understandably, they have a policy where after a certain number of crashes, they can cancel you. Most companies do 3. Some might do less. Some might do 1 or 2. If your policy is canceled before the claim, you can't get paid off the policy. So some companies are dirty. You'll call them about a potential crash. Before all of the information goes in for the claim, they've terminated your policy. So you can't get any money off the policy. They do that with the houses. That's why California had passed a law that prevented the house insurance place from canceling on anybody who was trying to take a claim when all those houses burned up in California. Because if any kind of insurance policy has their way, they want you to pay for service when you don't need service. But when you need service, they don't want to pay you. But they gotta, or at least they're supposed to. So why is monthly payments helping you out a lie? Because choosing to pay monthly instead of once or twice a year almost always triggers hidden charges. Insurers don't offer this out of kindness. They offer it because it makes massive and undeclared profits. And you guys don't even pay this any attention. I've noticed it, and I've asked it from time to time. Which one's cheaper, paying it all at once or making monthly payments? And sometimes, depending on the policy, it doesn't make a difference. Sometimes you see the fees because the total amount of money that you would have paid over the 6 installments plus whatever down payment that they gave you versus what they told you the outright flat amount was. Sometimes the monthly payments is visibly larger, but other times it looks like it's not larger, but they will tell you hypothetically that there's a discount if you pay for it in full. That's because the original price is the discounted price. They charge you an inflated price and then say, let's divide that up into monthly payments. Now, the practice is called premium financing, and it's a global market that is valued at nearly $50 billion since 2024. And the most obvious cost is the installment fee. Many companies charge a service fee or administrative fee for every single payment you make. It might sound small, maybe $5 or $8 per transaction, but let's do the math, and we're going to see exactly how much this is not convenient. So an $8 fee every month is an extra $96 a year. Not a big deal to you, just for convenience. Now, 12 times instead of one. If you have 2 cars and a home policy, these fees can easily add up to hundreds of dollars to your annual costs, but the fees are just the start. So some insurers get more sophisticated. They might advertise a low APR or annual percentage rate on the financing, but they can manipulate how that APR is calculated by changing the number of payments or requiring a big deposit. That makes the financing look cheap on paper, but the actual dollar amount you pay, the total installment cost, doesn't change a penny. That's why you have to ignore the advertised APR and focus on the real world price of that convenience. Maybe the most unfair part of this lie is the double hit. Some insurers don't just charge you a finance fee, they also quietly increase your base premium just because you choose to pay monthly. In their eyes, someone who can't pay the full annual premium up front is a bigger risk. So they bake a higher rate into your quote before adding the installment fees. It's a hidden tax on people with tighter budgets. Steve says every 6 months is the best to save money. If you have an annual plan that you can afford to pay for, that's the best because you're paying once a year. So if you got to pay $800 for a year's worth of insurance, that's way better than paying $600 every 6 months. And that's way better than paying $150 a month for 12 months. Even if $150 is cheaper than some people, like I think it was Steve that earlier today that was saying that the policy he has is $300 a month. But if you think about it, 10 months, that is $3,000. So he's paying $3,600 a year for his car insurance. That's a lot of insurance. They got some people that are SR22s paying the same amount. Now, if you have a Hellcat, you might be paying double, like upward of $800 a month. Yeah, that part. Steven says, what is the best way to insure just one car if you have it financed? In my experience, Allstate has this pay-as-you-go policy where they charge you like 25 or 15 or 50 cents a mile. And if you're not driving that much, you could benefit from that policy, because like I might drive 30 miles a week, specifically because my insurance policy asked me to. But if my insurance policy didn't ask me to, I might only drive that 30 miles a week twice a month, which would be about 60 miles out of the month. And the rest of the time I wouldn't drive. Now, if my insurance policy charged me, say, 50 cents a mile for that, which is pretty high, but let's say they did, hypothetically. Even with a high premium of 50 cents a mile, if I'm doing 60 miles a month, that is $30. $30 a month. If I don't drive it at all, it's free that month. So if I called an Uber, if I only drove the car when I couldn't afford an Uber, or if I only drove the car for out-of-town trips, my policy might cost me $100 a year. That's the difference. That's probably the only insurance policy that I think makes sense if you pay by the mile for individuals who don't drive a lot. But individuals who drive like 500 miles a day, 1,000 miles a week, 3,000 miles a month, you need an unlimited insurance policy. And, you're looking at $150 to $400 a month on your insurance policy to make sure that if anything happens, whether they hit you, whether you hit them, whether you run somebody over, that you're covered. Now, here's an example. Look at David. David's going to be our example for today. He needs car insurance, and he gets a quote for $1,800 a year. The agent offers to break it down into monthly payments of $150 a month. Simple enough. But David asks for the breakdown. He finds out the pay in full amount is $1,650. The company had already baked in $150 monthly payer penalty into his premium. On top of that, there's a $7 per payment fee. So he's actually paying monthly $157. Over the year, he'll pay $1,884. That is $234 more than the annual premium. An effective interest rate of 14%. That's crazy. Now, the agent never called it a loan or mentioned an interest rate. It was just a convenient service. That's the lie in action. So how do you fight back? First, always ask for the price in two ways: the pay in full annual price and the total cost of paying in monthly installments. Ask them directly, what is the total installment cost? What is the dollar amount I will pay in fees over the year for paying monthly? Second, check your bill. Look for line items like installment fee, service charge, or administrative fee. If you see them, ask if they can be waived. Sometimes just asking is enough. Third, if you can afford it, pay annual or semi-annual. It's almost always the cheapest option. If you can't, try setting aside the monthly amount in a savings account so when renewal comes up, you have the lump sum ready to give them. You'll give yourself a guaranteed return by avoiding their financing charges. Fourth, when getting quotes, always start by asking for the annual premium. This ensures you're comparing the true base cost between companies without the distortion of different payment schemes. Now, treat the offer of monthly payments like what it is, a separate financial product, which is a loan. That's how you go from being a passive consumer to an informed consumer. Why do they punish people who live check to check? Because the rich bank off of the poor, because the poor are poor. The rich bank off of the ignorant because the ignorant don't learn. They bank off of the elderly because the elderly is helpless. To capitalize, the idea and the premise of capitalism is to take advantage of somebody else's wealth. That is the full definition of capitalism. In order for me to make money off of the stocks, somebody else has to fuck up on the same stocks. In order for me to make it big on Bitcoin, somebody's got to fuck up on investing on Bitcoin. In order for me to get a house on a good deal, somebody else had to fuck up on their house payment, lose their house, and now I'm buying it on a foreclosure. Someone else had to fuck up their marriage, and then they had to short sell the house for the divorce. And now I'm taking advantage of a cheaper house. That is what capitalism is all about. People are punished for being broke, for being weak, for being ignorant, and they have to pay the cost for the convenience of somebody else knowing everything you don't know, doing everything you're not capable of doing, and affording to cover the spread, which you can't do. That's why people are punished. It's not because they don't like you. They don't know you, but they know you need this service, and you're willing to pay what it costs to have that service. So because they can't trust you to pay this service because you're too broke to pay it in full, they're going to charge you extra money. This is how they secure their investment because they're investing in this company. So if they're going to front you a service or front you a value, they're going to tax you a surplus so that if you pay a certain percentage of the policy and default, they still made 100% of their debt and still have a little bit of profit on the side. But if you pay for all of it, they have even more profit. That's what you got to think about. They do the car dealerships do the same thing. They pick up a car out of the auction, usually 25 to 30% of the value of the car. They might put 10 to 20% of repairs into the car, which is 50% of the total value of the sale price. Then they sell the car for double what they paid for it, repairs and all. Then you buy the car. They've got negotiation room. If the car is valued at $6,000, they bought it at $1,500, put $500 in it. It's $2,000. They're selling at $6,000. They can drop the car price by $1,000, which makes you feel like you got the car to steal. They still made a $2,000 profit off the car. And then they're going to charge you interest on the car. So they're going to make a profit again because they're going to finance the car because the price of the car was $1,500. So they're going to ask you to put $2,000 down, which covers what they paid to get the car and what they paid to fix the car. And then you can have the car with the other $4,000 finance, which is the profit. So they finance the profit. They didn't lose shit. If the car gets repoed, if you steal a car and they never give it back to them, whatever, they already got paid off the down payment. You're just making monthly installments on their profit. And they're charging interest on that. And you're going to pay that for 2 to 4 years. Even though they told you it's an 18-month finance option, you're going to keep paying it until you pay the car off, right? But how much is your interest rate? It's going to be higher because you're a high-risk financer, which is why you're going to a used car lot instead of a new lot. Think about that. Now, this next lie is a cousin to the first lie, but it operates on a much broader scale. It's the promise of a straightforward price. The agent says this quote is all inclusive or final price on a website that looks simple. But the insurance world is filled with what the industry calls junk fees. These are extra charges that often aren't included in the headline price, but are perfectly legal ways for insurers to get more money from you without having to tell you why. These fees can account for 5 to 15% of the insurer's profit. What makes this a legal lie is how these fees are disclosed, or rather, how they aren't disclosed until the very end. This is a deliberate strategy. A common tactic is to show you a clean price while you're filing everything out. Then, on the final payment screen, the pop-up of extra fees for policy administrations or underwriting. By that point, you've invested time and you're psychologically committed. You're one step away from putting your credit card down if you haven't already. They aren't a bank, but they are banking on your exhaustion from the process to make you just click accept. Because you've probably gone through a few dozen other insurance companies that didn't take you. You probably had them before, something went wrong, you changed policies, and now you're not able to go back. Now you're looking for another one. You come to find out that they have branched off to sister companies that have different names than the original. But when you go to apply for those sister companies, you come to find out they deny you because you might owe money to the original company. You might have too many crashes on your record from the original company. You might have had an extremely high costing claim that didn't work itself out in court. Now you can't bank with or insure with any of the partnering companies of the company that you lost a lot of money for in an insurance claim. So you will be exhausted trying to find a functioning insurance policy after you have been driving since you were 16 and now you're 36. Yeah, you'll be tired of looking for insurance policies. So you just click accept. These fees have many names: a policy fee or organization fee is a one-time charge just to become a customer. Policy maintenance fees or ongoing charges. They might charge you a fee just to update your address or add a new car. Some even charge you for getting paper statements. A particularly shady part of this is something called regulatory arbitrage. Regulatory arbitrage. In places with strict rules on raising premiums, some companies reclassify part of the premium as a service fee. Fees are often less regulated than the premium itself, so it's let them increase your total cost without technically breaking the rules. It's a shell game, and you're the one playing it. Special shout out to George. It's never about the money that's the illusion. It's your time, your time, sweat, and stress that holds any value. He's right, because it does not matter. If you're willing to pay the price, they'll give it to you. You can negotiate some of that stuff. But a lot of that stuff, if you're not satisfied with what they've got to offer, if you don't want to do it their way, you got to go somewhere else. I had that problem with a loan agency for a property. We were working on picking up a property in one of the other states, and the I want to say salesperson, but it was like the loan officer. She was horrible. She didn't know how to do her job. I was doing her job for her so that we can get the loan going. And I asked for a different loan agent, and they were like, "Oh no, she's doing just fine." I'm like, "Bro, no, she's not doing good at all. She doesn't know shit about her job." Somebody else had to explain to me how her job worked and what she was supposed to know that she didn't know. And when I asked her about it, she said, "I don't know. She's got to go ask somebody else." I'm like, "Bro, I just want somebody else. You know, whoever you asked for the answer to my question, that's who I want to be serving me right now." So they didn't want to provide me with the information. And I was like, "Nope, that's okay. I'm gone." And I went to a different loan agent, and we worked towards closing that house. Special shout out to Keith. He said Long Beach is in the house. So we're gonna make a special shout out to Long Beach. Man, Bayside, you should be diving in right now. Bayside, jump in, and then we start repping all of Florida. So since he's repping Long Beach, I got to go ahead and do this. Tampa Bay and Hillsborough County, Tampa's in the house. Apollo Beach is in the house. Riverview, Orlando, Dade City, Jacksonville. Special shout out to Miami, South Beach. I got to be missing a few. It's too many counties in Florida. We put a large quantity of the most valuable areas in Florida, except for Jacksonville, because Jacksonville's the armpit of Florida. Throw some shout outs for Florida. Now, if we came through another hypothetical, imagine if we were talking about Maria. In Maria's situation, she's moving and needs to update her renter's insurance. So she spends 30 minutes on the phone with an agent. At the end, the agent confirms her name, slightly higher premium that comes with that. And then what the agent doesn't say is that $25 is a policy amendment fee and has been tacked onto her next bill. And that's what Stephen was talking about earlier, is that some policies will just charge you money on your next bill just by asking a question. So when she calls to ask about it, she's told it's a standard administrative fee. It was probably buried in the fine print she signed a year ago, making it legal. Because as soon as you sign a contract, this contract is binding. No matter how much they are voluntarily going to cheat you out of your money, because you signed the contract, you agreed to be cheated because you didn't read it. You didn't read the fine print. You didn't take the contract, get it reviewed by a third party, preferably a lawyer, and make sure that you're not getting fucked. You didn't do that. You just click accept. Most of us do it. We click accept on every video game we want to play, every app we want on our phone. We click accept. We don't read the 300 pages of information related to it. And that's the reason why most apps can access your phone and your camera and a lot of your hidden information on your phone, because you agreed to give the app access to your data, to your downloads, to your camera reel, to your uploads, to your camera and your microphone, which means a lot of people's phones who are not listening to this YouTube channel is wiretapping their house, because the apps, they got 30, 40, 100 apps on their phone that have been given permission to access and utilize the video and the camera. So they can listen to what you're saying in the house and record a lot of it, because you also granted them access to your data because you clicked accept. Think about that for a second. Then remember everybody with an iPhone when they used to hack into your FaceTime. Think about that too. But it was never mentioned on the phone to her. And if you multiply that by millions of customers making small changes, and you can see how profitable these junk fees are. So what can you do about that? Here's your action plan. First, become a student of the fine print, because before you sign anything, demand a full itemized fee schedule. Ask the agent directly, besides the premium, what other fees could I possibly be charged for? Get the answer in writing. An email created a paper trail. Second, when you're buying the policy, start by opting out of all the optional services like rental car reimbursements, roadside assistance. Just get rid of all of that stuff. You might already have those services through your credit card or your phone bill or AAA. So you could be paying for the same thing twice. Look at each add-on and only choose ones you're certain you need. Third, never be afraid to challenge a fee. You don't understand it. Don't buy it. Call your insurer and ask for a clear explanation. State that you weren't made aware of it. Customer service reps are often empowered to waive smaller fees to keep you happy, which keeps you spending money with them. So if they're taking away a $5 or $10 fee here and there, or a $20 or $30 fee, I got them taking $150 off my phone bill every month. To keep you paying money, they will take a little bit off your bill. They expect most people won't bother to call. Finally, look into new technology. There are AI-powered apps emerging that can scan policy documents and flag these hidden fees for you, helping to level the playing field at a cheaper rate than paying the cost for legal aid to look this over for you as well. The lie of the all-inclusive price preys on your assumption of good faith. By shifting your mindset from trust to verification, you can make sure the price you agree to is the price you actually pay. This is the most dangerous lie of all because it gives you a false sense of security that shatters right after a disaster. An agent will use comforting phrases like "this is a comprehensive policy" or the classic "don't worry, you're fully covered." The lie is the implication that your policy is a magic blanket that protects you from anything. Okay? And that's not the truth. You come to find out that your policy doesn't cover you for a lot of things, but you only find that out when you start trying to use your policy. Now, the devastating truth is that every insurance policy is a list of specific promises defined by an even longer list of exclusions, conditions, and limitations. So the reason is a legal lie that the agent isn't technically misrepresenting the policy is that they aren't legally required to read you every single exclusion in your 50-page policy document. They sell you the highlights of what is covered. The responsibility for understanding the dozens of things that are not covered is put squarely on your shoulders. And they know almost nobody reads the whole thing. They rely on that. This lie shows up most often in policy exclusions. A standard homeowner's policy might cover water damage from a burst pipe, but it will almost certainly exclude damage from a flood, which requires a separate policy. So when you get a policy for your house that claims to cover water damage, and when you ask, will it cover for a flood? And they say that it's an all-inclusive policy, water damage is covered. They said that water damage is covered. They didn't say flood damage was covered. But because they repeated themselves when you ask about floods, and they say it again, that water damage is covered, you assume that floods cause water damage, and that is covered. That is an assumption. That is not what your policy says. Your policy says that it only covers the water damage from the burst pipe of the house, not from the ocean that took out your house. Two different things. It might cover a tree falling on your house, but not the cost to remove the tree from your yard if it didn't hit anything else. The situation that you think about in 2024 and in 2025 gets even worse because we're facing huge risks of climate change. A shocking 45% of U.S. insurers started limiting coverage in high-risk areas, and they're either pulling out of places prone to wildfires and hurricanes or rewriting policies with new exclusions for the very disasters most likely to happen there. People who thought they were fully covered are finding out their protection is gone just when they need it most. And that's what everybody in California just experienced between January and February during that 6-week fire. Consider the Thompson family. They live where rainstorms have gotten more intense. They have a good homeowner's policy. One spring, a massive storm causes a creek to overflow and their basement floods. They call their agent, devastated, but relieved that they're insured. A week later, they get a letter, claim denied. The reason? Their policy covers water damage from burst pipes inside the house, but explicitly excludes damage from groundwater or rising water, the technical definition of a flood. The agent who sold them the policy and every agent since told them they had great water damage coverage. Like I said, nobody ever said, but if water comes from outside of your house, you get nothing. But you never asked either. The Thompsons are now facing tens of thousands of dollars in repairs out of their own pocket, all because they believe the comforting lie of fully covered. This is a gut-wrenching common story. Here is your battle plan to make sure it doesn't happen to you, or if it's already happened before, make sure it doesn't happen again. First, demand to see the exclusion page of any policy before you buy. Don't ask what's covered. Ask what is not covered. Force them to walk you through the big ones. Ask about specific scenarios for your life. Am I covered if a sewer line backs up? Is there a separate hurricane deductible? Does my auto policy cover me if I use my car to deliver for DoorDash or Postmates or Instacart? All of y'all who do deliveries, y'all got to check that shit out. Because if it don't, the one thing you can't say during the car crash is, I was delivering, because that would nullify your insurance policy. You would have to clearly lie and say, I was just going somewhere. Just half-baked going somewhere. Because if the police officer puts in a report that you were doing deliveries with an insurance policy that doesn't cover deliveries, then your crash is not covered. And any policy violations gives subject for the policy to be terminated. Likewise, when you finance a car, and a lot of car dealerships have it in their contract that you can't use the car for deliveries. And some won't even let you use the car for Uber. They won't check, but let it slip out of your mouth that you've got high miles on a car because you're using it for work, for doing deliveries or doing Uber or Lyft. They can repossess the car because you breached the contract. Got to look at the fine print. Second, never assume if you have jewelry, art, or expensive electronics that they're not fully covered or covered by your standard policy. Most policies have very low limits for these items, sometimes just around $1,500. You need a separate rider or floater policy to cover their full value. Third, conduct an annual policy review. Don't just let it auto-renew. Insurers change the terms at renewal. Every average U.S. home insurance premium rose 18% in 2024, and they're going to rise again in 2026 after everything that happened in 2025. So treat your renewal notice like a brand new contract and check for any unwelcome surprises. Everybody who's got a house in California, double check your renewal policy. What are they not including after that big ass fire? Because if they're going to say that your house is not covered from natural disasters such as brush fires, then you're not covered if your house is in a forest fire area. You're going to need to get a homeowner's insurance policy from a different company that still covers that brush fire or that wildfire. Fourth, document everything. When you talk to an agent about coverage, send a follow-up email summarizing the chat. To confirm you advertise or advise that my policy would cover X, Y, and Z, please let me know if I misunderstood. This creates a written record that can be incredibly valuable in a dispute. The idea of being fully covered is a myth. Your goal to understand the gaps in your coverage so you can either fill them or make a conscious decision to accept that risk is on you. Now, True peace of mind comes from your own clear-eyed understanding of what you and your policy are doing and what you're not paying for versus what you are paying for but you're not benefiting from. Now, we're about to dive into two of the most modern lies insurers are using right now involving your data and your loyalty. If what you guys have heard so far, opening your eyes, do me a quick favor, hit the like and subscribe. Make sure that you guys share this with somebody that you know that can use it. Share it with somebody that you know to argue against it. Follow us on Twitch. Follow us on Twitter. Now, if you hit the notification bell when the show goes live, you guys will be able to get that push notification on your phone, and then you can join us from Twitch, Twitter, or YouTube normally, but you will know that we went live the same way Steve just found out that we went live, right when we went live, even though we went live almost an hour late. My car doesn't break down every day. This is the first time since January, and it was poor maintenance in January. We're working on the litigation on that, which is crazy because when I asked for the refund because of what they already did, now I'm like, well, the car is broke again. So now I have two reasons to get a refund because you made changes to the vehicle, didn't document it, which breaches the warranty. Now you got a warranty repair, and I don't trust you because you tried to sell me on repairs I didn't need to get you to put the one gasket on my car that you left off of my car or deliberately took off of my car, trying to force me to pay for a head gasket job that I didn't need because all I needed was a water pump and a thermostat. Bro, it's a lot of big stuff. You got to look for the scams. Everybody's doing it. Now, the insurance landscape is changing fast, and my goal is to keep you guys armed with the latest information to protect yourselves. And I want to create a community here where the insurance companies have armed lawyers to shut you guys down if you sign a contract. So we just have to get each other's backs and get all of the knowledge and information that we need before we go grab our own lawyers to shut down situations that don't work out. But you're supposed to make your money talk for you. So when you are in a situation where you can either buy it, or if you disagree with the policy, you could take your money elsewhere, you walk away. You would do better uninsured catching a bus and catching Ubers until you find a policy that you trust than to just take this policy because it's convenient. Because you got to pay the cost for convenience. Now, go down to the comments section, share your guys' stories. Have you been hit with a surprise fee, had a claim denied you for unfair reasons, buried in a fine print list? By sharing your experiences, we can spot patterns and then help everyone get smarter. Your story could save someone else a fortune. Now, let's get deeper into this conversation. The lies that come dressed up in the language of personalization and fairness. Your insurer often offers you a shiny new app or a device for your car. This is telematics. The pitch is tempting. Let's see how you drive, and we'll reward you for being a safe driver. You'll get a fairer price based on your habits, plus a 30% discount or up to 30% discount. This is the lie of the benevolent data collector. The truth is, for more complex and carries hidden risks. The reason is this is a legal lie and the lack of transparency. You consent to share your data, but they are incredibly vague about what they're collecting, how they're judging you, and who they're sharing it with. Only about 22% of people using the program feel they actually understand how their data is being used. So what's really happening here? These programs aren't just tracking your speed. They are monitoring your exact location via GPS, the time of the day you drive, how hard you brake, and even your phone usage in your car. All of this data is fed into a black box algorithm that you have no ability to question. This creates huge problems. First, your premium can go up. They can advertise discounts, but they aren't quite. But they aren't quite about the surcharge. They're going to give you a discount without talking about how they're giving you a surcharge or giving you a premium because of your driving habits. So after the discount offsets the premium, you're breaking even. Kevin said, in my off time, I rearrange furniture. That's good. In my off time, I do a podcast. And today the podcast started over an hour late. But we're going to be wrapping up pretty soon. Now, the one time you had to brake hard to avoid an accident, the algorithm might just see aggressive driving home from a late shift. That's high risk night driving. You are giving them ammunition to raise your rates. Second, this data can be used against you in a claim. Let's say you're in an accident that wasn't your fault, but your telematics data shows you were going a few miles over the speed limit. The insurer could use this to argue you were partially at fault, reducing what they have to pay you. The data you volunteered for discounts is now a weapon against you. Third, and most chilling, is data privacy. What happens to all the personal information? Privacy policies are often murky. Some insurers may sell or share your driving data with third-party data brokers. As a major New York investigation highlighted, your location history and driving habits could end up in the hands of companies you've never heard of. So let's imagine Susan, a freelance photographer. Her insurer offers a telematics program with the promise of a big discount. She signs up and gets a 15% off, but her work often requires her to drive late at night. The algorithm flags this as risky. She lives in a city, so sudden stops are common. The algorithm flags this as hard braking. At her next renewal, her discount is gone and her premium actually increased by 10%. She'll call to ask why and gets a vague answer about her overall driving profile. Worse, after a minor accident, the other driver's insurer subpoenas her data to try to prove she's a risky driver. The discount program has become a liability. This is a hypothetical scenario, but it is based on the very real risk that have led to lawsuits like the one filed against Allstate in Texas in January of this year, 2025, alleging this exact type of misuse of driver data. So how do you navigate this minefield? First, treat your data like money. Before you sign up, read the policy and the privacy requirements. Look for keywords, what data is collected, how long it is stored, is it sold to third parties? If you can't get clear answers, it's a huge red flag. Second, ask pointed questions and try to get answers in writing. Can my premium go up because of this program or only down? What specific behaviors are penalized? How can I dispute a finding from the data? Third, consider a trial run. Some programs let you test the system for a short period to see your potential discount before you fully commit. This gives you a sense of how you'll be judged without locking you into a surveillance agreement. Fourth, know your rights. Lawsuits and laws and everything related to this are evolving. States like California and New York are introducing stricter rules. Stay informed about the consumer protection laws where you live. The promise of a fairer price through data sharing is seductive, but it turns your car into a 24/7 surveillance device. Approach these offers with extreme caution. This final lie is one of the most counterintuitive and frustrating. It's the myth of the loyal reward. Loyalty rewards. I know y'all have heard of it. We're taught that loyalty is a good thing. Your bank gives you better rates. Your coffee shop gives you free drinks. It makes sense that your insurance company, after you've faithfully paid them for 10 or 15 years, will give you the best rates, right? Wrong. In insurance loyalty, it is often penalized. Special shout out to Michael. Michael's in. He said, it's all control. Remember to like and subscribe. Look, Michael's telling y'all what y'all need to be doing now, because I give y'all too much information from too many different places and y'all need to take it all in. Oh, I'm going to see you again, man. I'm about to wrap this up because I'm late as hell. I started an hour late because my car broke on my way back to the house from Tennessee. So where I would have finished by now, I think I've got about 10 or 20 more minutes, but we're almost done. Depends on how fast I finish the script. This loyalty penalty or price walking, here's how it works. Insurance companies know that long-term customers are less likely to shop around. Switching feels like a hassle. They call this customer inertia, and they bank on it. Instead of rewarding you, they gradually increase your premiums year after year by amounts just small enough that you might not question them. This is price walking. Why do they do this? Their main goal is to get new customers. To do that, they offer incredibly low introductory rates to get people to switch. But someone has to pay for those discounts. That someone is you, the loyal customer whose rates are quietly creeping up. In essence, your loyalty penalty is paying for the cheap premium of new customers. While some regulatory agents have started to crack down on this, the problem persists. Insurers use price optimization algorithms that don't just look at your risk, but at your shopping habits. The algorithm predicts how much they can raise your premiums before you'll bother to shop around. If their data says you aren't price sensitive, they'll change you more. It's not about what it costs to insure you. It's about what you're willing to pay. The long-term customer pays. That is definitely true. Now look at Mr. and Mrs. Chen. They've had their home and auto insurance with the same company for 20 years. Never a major claim, perfect driving record. Each year their premium goes up 3 to 5%, which they just assume is inflation. This year, their new neighbor with a similar car and house move in on Chen, and Mr. Chen asks what he's paying for insurance and is shocked to learn the neighbor, a new customer with the exact same company, is paying 25% less. Furious, Mr. Chen calls his agent. The agent admits the neighbor is on an introductory rate. To keep Mr. Chen's business, the agent suddenly hypothetically finds several discounts he qualifies for and lowers his premium to match the neighbor's. The discounts were there all along. The company was just content to let the Chens overpay for years, banking on them not checking. Their 20 years of loyalty meant nothing until they threatened to leave. So how do you avoid this? First, you have to abandon the idea of loyalty to an insurance company. Think of yourself as a free agent every single year. Set a calendar reminder 1 month before your policy renews. That is your annual shopping window. Second, shop around every year. Get quotes from at least 3 to 5 different companies. This is the only way to know the current market rate for your coverage. Third, use the quotes as leverage. Call your current insurance, tell them you've been a loyal customer for years, but you have been given better offers. You'd prefer to stay if they can match it. Now, you will be amazed at how often they are suddenly able to find discounts. Further, the fourth thing you're going to do is don't be afraid to switch. If your insurance won't match a better offer, leave. The process is much easier than you think, and the temporary inconvenience can save you hundreds, if not thousands of dollars. Underthinking loyalty to an insurer is a liability. By being a proactive shopper every year, you are not being disloyal, you are being demanding to be treated fairly. So when you look at these 5 deceptions, you see the pattern. There's a lie that monthly payments are free services when they're really high interest loans. The lie of an all-inclusive price that hides a minefield of junk fees. The lie of fully covered, a comforting phrase designed to make you ignore all the fine print that can ruin you financially. The lie that sharing data is just for a discount when it's really about gathering information to use against you. And the lie that loyalty is rewarded when it actually penalizes you to pay for new customers. The common thread is that none of this is technically illegal. It's a system built on complexity and consumer inertia. They are counting on you being too busy to look closely. They profit from the gap between what you think you bought and what your contract actually says. But now that gap is closing. You're now armed with the knowledge to see these tactics for what they are. Special shout out to Earthquake. He said, "What's up? What's up, Earthquake?" Diving in. It's good to see you. You know to ask for a total installment cost. Don't demand a fee schedule to ask what is not covered. That's what you need to ask. To question the real cost of telematic discount, and to know that the most powerful tool you have is your willingness to shop around every year. The goal isn't to be paranoid, it's to be prudent. It's about becoming an active manager of your own insurance. True fairness is the industry that starts with transparency. And when the industry won't give it to you willingly, you have to be equipped to demand it. You have to have the power to challenge unfair charges, question denied claims, and get a fair price you deserve. Don't just pay your premiums, understand them, question them, and own them. If this was helpful with you guys, please share it with someone that you care about. This information is for everyone with an insurance policy need, and you guys can benefit from doing your own research on this. Subscribe for more deep dives into protecting your money, and remember to follow us throughout the week for all of the stock tips that we're going to be giving you. And it's not really insider information. It's just researched information that I put extreme effort into researching for you guys. Make sure that you follow for that as well. With that being said, I really appreciate you guys hanging out for the delay, the technical issues, because we did fix this yesterday, but apparently it went awry again today. We're going to figure this out. I'm going to let StreamYard know, and hopefully we get everything under control for tomorrow. Either way, tomorrow is Friday. We've got shows up for Friday and Saturday, I do believe. We need to get Monday and Tuesday up there, or Sunday and Monday up there. So make sure that you hit the notification button on the shows that currently are listed. And then by the time Friday show starts, you should have Sunday and Monday up there, or at least Sunday up there. because I got to figure out what we're doing for Monday. I found out earlier today that there was a commercial being run about the government giving $5,800, and I want to see how true that is. And then I seen another commercial because I was listening to YouTube while I was driving, and I seen another commercial that was talking about there is a law issued by the government that allows you to wipe all of your negative marks off of your credit score. And I want to do some research on that as well, because I did tell you guys that we were supposed to be having a discussion about how to fix your credit. So I want to get some information on those before I schedule those shows. So I'm going to figure out what we got going on. And then once I get an understanding, we're going to go to live. So with that being said, ladies, as long as the situation doesn't make sense, I'm going to keep asking you ladies to make it make sense. Special shout out to Michael. I really appreciate you for coming in. Kevin did a good job. George and Steven from Twitter and Steven R. Jr. from YouTube. Special shout out from Twitter and Songbird. I really appreciate you guys. And Eric M. for coming to the show tonight. Thank you very much. This is a 75% male-driven podcast from the male perspective. Ladies, the information you can benefit from as well. The goal is to make men higher value men, but ladies, y'all can use this information to make yourselves better and become higher value women as well. This is going to change your mentality, your decision-making process, and the way that you spend money so that you can save money to invest money, so that you can build a retirement, so that you can at some point earlier than your original plan, you can quit working for someone else and either start working for yourself or living off your own wealth. Either way, I encourage you to come back to the show every day and get something new from us every day of the week, 365 days a year, because we will not let the sun rise without going live. Thank you for coming to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. I'll see you tomorrow night.
My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity. That's my personal command.